Hello, my name is Tyler, and welcome back to my video blog series. Lately, I've been helping a lot of my clients with year end tax planning, as well as implementing year end tax planning for my own business. And since there is an atmospheric river currently shooting through Seattle, I thought, why not get on YouTube and share some of the tips that I'm having myself do, as well as my clients. I'd like to preface this by saying this is just for educational purposes. This is not your tax, your legal, or your financial advice. Please consult with a CPA or tax professional for your specific situation. With that said, I do want to share some things that I think will help. And yeah, let's get after it. So, the first big tip I want to share with you today is a lot of folks have business expenses on their personal cards. Now, you should have a breakout between your personal financial system and your business financial situation if you're a business owner. There should be a good healthy wall up between the peanut butter and the jelly here in this instance. But many times there's not. Many times people are commingling things. In fact, sometimes, if you run an S Corp, you do want to have some things on your personal card because they're considered a mixed use expense. But in instances like this, I would always encourage you before the end of the year, go back in with a fine tooth comb and look for any business expenses on your personal bank statements. Because then that way, when you go to actually file your tax return in the following year, you're made sure that you actually pulled in every expense that needed to be in there. So that's step one. That's an easy one. Step two is going to be, how can we take a look at anything that we're going to pay next year and potentially pull that into the current year? So let's say, for example, I pay for my continuing education because I'm a CPA. And instead of paying a monthly fee each month, I say, hey, organization that gives me my CPE, it's not always the best, I'll pay for a year. And instead of paying for it on the first every month, I'll just pay for a year and I'll pay for it today, the 16th. Now, as long as you're a cash basis taxpayer, which many small businesses report that way on your tax return, instead of getting a deduction in the next year, you can pull that deduction into the current year and prepay it. So sometimes it's easy. Sometimes you can also structure an agreement with one of your vendors. You could prepay rent, you could prepay software. A lot of times folks are happy to get that money up front because there's something they can do with it. And if you're in a situation where you're in a really high marginal tax rate, it may be a good thing to accelerate some expenses in the current year. However, it's always good to think long term. If you have, an even bigger year coming next year, and you might be paying an even higher effective tax rate, it may make sense to hold out that deduction until the following year. But if you're getting to the end and you're thinking, man, I'm going to way overpay this year, I need to get some new expenses, prepaying for some expenses, as long as you're a cash basis taxpayer, can be a great way to go. Now, this one is pretty cool. I'm a big fan of an HSA. And so let me just write that out here. HSA, a health savings account. And a lot of times people think, man, I'm going to have to pay a ton on this high deductible, high cost health insurance plan. And that can be true. However, if you're someone who's a bit healthier, doesn't go to the doctors too much, and thinks, hey, I'm probably going to have kids one day, or I might have to get some crazy surgeries. I played sports when I was a kid and put off getting that shoulder replaced in the future. Setting up an HSA could be a really powerful plan for you. And the reason for that is because it's a triple tax benefit. So, one, you're not taxed on that money today. Two, it grows tax free once you invest that money, because you can actually stock that money away and invest it. It's not like an FSA where it is completely gone if you don't use it that year. An HSA, you can keep building it up. And three, the third tax benefit is that you actually can completely utilize that benefit in the future tax-free, which is great. Um, there's another pro tip here, which is you don't need to actually pull the money out and reimburse yourself immediately. As long as you hold on to the receipts, you can reimburse yourself down the road, which is a pretty good tax planning technique that a lot of folks forget about. But if you have the option to do an HSA through an employer or your spouse's employer, or you run your own business, an HSA could be a pretty powerful tool for you to implement. Moving on, my fourth biggest tip is going to be understanding how to stock money away for retirement in the most effective manner. Now, retirement is a great thing to do. I am also a big believer that sometimes investing in yourself now is a great use of your money and typically will get you a better ROI than putting money away for retirement. But that's just the business owner side of me. The CPA is going to tell you, hey, make sure you're sticking some money away for your retirement, even if it's just a little bit. And a lot of folks think, oh, I should absolutely do a Roth, or oh, I need to do a traditional because I'm already in the highest tax bracket. And that may be true. However, I think it's always good each year to just take a look at the total amount that you can put away and then kind of understand, hey, is my tax rates probably going to go up in the future? Am I probably going to make more down the road? If yes, now's a great time to pay tax on it and dump that in the Roth bucket. Or you could say, hey, I don't think there's any way I could pay more in taxes in the future. I might as well get out of paying tax here. And honestly, I need to lower my taxable income anyway this year. Putting it in the traditional bucket can be good. However, I'm always a big fan of taking a look, understanding what your effective tax rate is going to be for the year, and then probably doing some sort of mix so that you can get a little bit into each bucket to set yourself up for success in the future. A lot of things I could go into on another video on that one. Lastly, there's kind of a lot going on here, so I probably am going to make a whole nother video on this, but I thought it would be good to introduce people to the concept of optimizing your reasonable salary if you're an S Corp owner for your QBI deduction. You've probably heard a little bit about this, or maybe you haven't. I think this illustration does a great job of highlighting what can happen. So many times for many, many years, folks have thought, man, the less I pay myself in reasonable salary, the better, right? It means I pay less in payroll taxes and I get the rest distributed to me through my S Corp and only have to pay income tax on that. That is true. However, there is audit risk there. You need to make sure you have some sort of substantiation on how you get to your reasonable salary. Many times I'll use the Bureau of Labor Statistics data and a few other factors to kind of figure that out. But this has kind of been what people did in the past. However, you can also completely go the other way where you're like, all right, I'm going to pay myself a huge salary. So that way I don't worry about audit risk. But then if you do that, there probably is not too much profit left in the business. And qualified business income deduction is determined off of the profit left in the business. Again, I'm not going to go into the super specifics of this because there's a lot to cover. But the big idea is you want to aim for the sweet spot. You want to understand, one, is my salary in a good position to where if I get audited, I'm safe? But two, am I actually getting the full benefit out of my QBI deduction because I still have some profit left in the business? So those are the 5 things I wanted to talk about. There's a lot. You could go into detail. If you put a comment in the chat, I'm happy to make another video and go into these things further. But yeah, I hope this helps. Thanks. Oh.